So I'll jump in here and, let's do a segment today. I like doing this type of segment overnight, going back and actually reviewing the ES trade, reviewing the chart, going tick for tick and looking at the setups and using the criteria to see if you would have taken a trade on this and how it would work out, basically. It's a little bit different from doing it real time. Most of these signals you're going to see on here have been placed here real time on the chart, based off mostly off the tradeometer or recognizable divergence. And again, remember our criteria for divergence. That's what our whole methodology is based on. So if you're not familiar with that, refer back to a lot of the videos in the forum on the playbook section. And just hang in there, because we're always talking about basically the divergence is a series of, we have a low and a lower low. This is on buy side divergence. We have a low and a lower low, where we have a low on the stochastics under that 20 line and a higher low as the price makes a lower low. And we prefer to have that above that 20 line. So you have this kind of upside thing. And, and down here you have this. And in reality, people would call this convergence. The two trend lines are converging onto each other. And divergence would be that sell side where you're pushing up and pushing down. I throw it all in the same category. Not going to talk semantics, but we're talking about divergence in the way normally the stochastics work with the price, and seeing a divergence from that normal action. So that's why I call it a divergence. From that point on, and a tradeometer and a 950 reversal and a recognizable pattern, that ended up being one of the best signals so far. And then you can see the nice move out of that. Now, if the day continues on, we start to see pivot areas pointed out, and I kind of draw those in when I start to see them, just to kind of measure out what we're doing. And then I put a trend line down here once we had a nice pivot defined. We broke down out of this rising trend line, and then we returned back up to it. So that's an interesting return to a retracement trend line. That happens a lot. You have to pay attention. It's a good way of trading. If we have a breakdown, you get a breakdown of a rising trend line. A lot of times you'll get that retracement back up to that trend line. And then from that point on, you get a follow through. And in this case, you can see it did kind of have a hard time getting through that trend line. Even though it did get choppy here, it did break down. And there was some news out there. You could see that the volume picked up. There might have been a sell program, an algo going off, but it was definitely something that the volume here spiked higher, and we sold off and broke down through some important levels. Now we saw that 226.86 level was an interesting zone, and we kind of bounced off it originally. And then this was a textbook, what we call textbook flag pattern, triple stochastic flag setup. And this is after a steep drop and a retracement underneath the 20-period moving average. But during that retracement, the stochastics here rotate back up to that 80 line, and the slow stochastics here, the 60, 10, and the 44, they're holding under 20 at the time that this rotates. Then this is considered a bear flag, and it's a continuation pattern down. So it's a great, like I said, surround yourself with only patterns that you want to trade. And just wait for those. And when they come up, you take them. Put a real understanding. Put a stop in that just is relative to where your entry is. Basically, you want to just all these entries are set up almost the perfect rollover. The timing is really done. So if something does not work here, then it doesn't work, and you have to get a fast stop out. Because typically, once you get into that overbought level, you start to rotate back down. Anyway, that's that happened, and then at 12:10 we got a bounce. There was no real bounce signal there, other than a triple stochastic setup, which is just all time frames here. And I don't typically look for those, but there was it there, and then we kind of moved up, and looking around here, not seeing much on the top here. But we started seeing this rising wedge pattern. If you take a look at this blue trend line, I put this line in here from once we had this little wedge pattern or little flag, and we had this pivot area here. And again, a pivot is a stock that goes from one direction to another direction. and that's your pivot area. So once you have that pivot area, you can put that trend line, connect those two pivots, and then again we had a pivot here. So now we kind of built out what we call a rising wedge pattern. 4 pivots, 1, 2, 3, 4, kind of closing in, and this typically breaks down. Now it seems like it broke down pretty fast here. Came back, retested it. This was a tradeometer setup, and this is where the tradeometer really started to take over. Really started to take over here. So we had that first buy signal, then it moved up to the VWAP, or actually back up to that yellow orange line, and we rotated back down. Then we had another tradeometer, and this one seemed to have pushed down a little bit further, but then popped back up. And you probably could have made an argument for a divergence here. Nah. I think there might have been a 5-minute or 3-minute divergence on the cash, 210 to 220. So let's take a look at 210 to 220 on the SPX or the SPY. Let's just look at the SPY on the 5-minute time frame. 220. We actually had a divergence here from 3 o'clock to 3:05. We did have one here, 220. We did have one, but it pushed a little bit lower. Oh, this was almost that coiled up. That was a coiled stochastic setup. Actually, we did identify this. So this is another great setup. Another what we call an HBS playbook play. Playbook plays would be the triple stochastic flag setup. You know, downward bearish flag moving down, or a bullish flag moving up. Criteria stays the same. And we have a wedge pattern. And a wedge pattern that comes along with the divergence is unstoppable. So that's another great pattern. And then we have what we call a coiled stochastic channel breakout. In this case, it's a downward channel. That's the trend is down, and the trend continues to be weak. And you can see we make a series of 3 or more peaks. So here's your first peak, second peak, third peak. And then typically, if you have that nice trend line and it seems to be kind of coiled up, and then the price underneath this, directly underneath, could be really confined into a tighter pattern. It could be, as the tighter the better, and you have this thing. That's when we have a breakout of both the pattern and the kind of the wedge pattern of the stochastics. When that breaks out, we typically have a nice breakout of the S&P, and that's exactly what happened. So that's a great pattern to trade, called the coiled stochastic channel breakout. Now, all these channels are also, I do have a course out on it, on the fundamental foundation of the HPS. That's over at the School of Stock if you're interested to get more information on all those setups. There's a whole couple courses over there on those. Alright, so this is where we are right now. And nice interesting little pullback here. Not bad right there. Take a look at the DB here. DB here getting crushed today. Gap down, but the one interesting is we're right down to a trend line. So, big volume is a capitulation volume where we have enough volume where it changes hands, and it doesn't give us that appearance that buyers came back in control. Probably a little bounce at the close, but not much. Yeah, 330 to 4. I have no desire right yet. I want to sometimes get into that GE, but I'm also holding back. So we're going to watch that for a trade, and then I'm going to bring up these cheap stocks again. We went over them yesterday in the video. Nothing really happened today with them. PRPO. Little pennant formation. There was some news out there the other week. I got into these cheapies. Typically not my style, but now I'm holding a little of PRPO, 1,000 shares, and I don't know much about it. Just read into some of these. We got into them when I was starting to trade some of these cheap ones that was being fed to me early pre-market of potential movers, and we did real well on those. BL and K here, Blink, still holding up there. We got that big bounce on that. There was some other ones. ES. what was it? E something, whatever the other one was. ERES. No. And then AVGR. This is an interesting one I'm watching too, right at the $2 level. It is kind of drifting back down. But there was some news out there that kind of popped it. It seemed pretty interesting, the news, but not doing much right now. Need some follow-up news to get this thing going. But those are high risk. The Vero is probably the closest one to a real nice chart and legitimate setup, other than the reversal candle we're seeing going into tomorrow. So we'll see how we can deal with that. I want to show you a little research done on the Finviz chart. So we're going to go to finviz.com. We're going to click on that right there. You can take a look at it has a lot of things here going on it. Here you have that market map, S&P map, Coca-Cola, PepsiCo, some of the Facebook actually was trading higher. But up here you can see on the top, up on this is the top of the page, and there's your address bar and what it looks like. Right underneath it you have the screener, you have insider, you have crypto even. I didn't even check the crypto. Let me check that crypto. Everyone's getting into crypto. Oh, that's not bad. A little heat map on crypto. Not bad. I like it. I like it. Alright, so what was it going back? I don't want to get sidetracked again here. We're going to look at this real fast. We're going to go back here. We're going to go up to insiders again. Alright, that's interesting. Swamp Rat here bringing me a nice little stock called, let's take a look at this one. I'm going to bring it over here. See if I get, oh I can't, I gotta copy and paste it. Copy and paste, copy. And then I'll paste it over here. So that is, what is that one? WCMH. Cancer vaccine eliminates tumors in mice. Staff reports. WCMH staff reports. It's not even a private. It's an in-house press release. Researchers say a cancer vaccine cured the disease in 87 of 90 mice injected. According to a study by researchers at the Stanford University School of Medicine, after injecting small amounts of two immune-stimulating agents into the solid tumors of mice, all traces of cancer in the rodents were eliminated. When these two agents together, we see eliminated tumor all over the body. Study shows that when they're injected to mice and lymph node tumors, the two agents not only caused regression in the tumor injected, but also in a second untreated tumor. According to the study, 87 of 90 mice injected with the agent were cured of cancer. That's really cool. That's interesting. You don't know if this is fake news. I mean, wishtv.com. You just don't know. WCMH. Let's take a look at the chart. What is it again? WC. Let me see what now. CMH. Oh yeah. WC. I don't even see it. Why not? Maybe it's a pink sheet. WCMH. Stanford WCMH. Researchers said. Alright. WCMH. I don't know why it's not showing up on my screen. That is a that is a is a TV station. Is it MH? No. You know, you would think something like this they were presenting at ASCO. So what's the name of the company? I don't even know what the name of the company is. Oh, you mean that was reported by the television station there? Researchers, all right. So is it a company that I know of? I don't know what the symbol is. There's no company there. All right, let's take a look here. I want to close up this the video here. I did a couple videos just on a couple setups here, but we did have a good tradeometer right here on the NQ, and the market here is starting to rally again. Previous close above us. We might go positive. We'll see how things turn out tomorrow. You know, Italy overhanging us, but you know, the charts weren't that damaged that today. They weren't damaged that much. So S&P, cash, the Dow, and everything else here getting a little downside, but the overall charts like Amazon, Netflix, holding strong and looking very good for a continuation tomorrow. So I think we're going to be concentrating on those a little bit more. Until then, let me close out this video. I want to stick with you doing the show here for about another half an hour or two, and then we'll get back onto it. Let me set this up here, send this out. You listen to DayTradingRadio.com, DayTradingRadio.com. Let me turn this off here.